SPX to 7,000? No. Right? What's going on, everyone? Jeremy Ritz here. Courage pays better than fear. Trading live from the eastern side of Pennsylvania. This Pittsburgh native here, coming to you guys to talk some trading this fabulous Saturday, September 20th. And what a crazy, crazy day on Friday with quad witching day. And those last 30 minutes were something. And in my community, we were talking, I said, watch for these crazy volatile moves. And I said, be on the lookout for these massive wicks and massive candles. And damn, did we get them. Hims had one. Microsoft had a crazy candle. I mean, there's so many to mention, but it was just like bang, boom, bang, boom, bang, 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 boom. Wow. It was awesome. And if you're a trader and investor, you love seeing stuff like that. You love seeing that wicked volatility. And it was definitely fun. But what's even crazier is typically quad witching day, especially in September, the worst month of all in the stock market. The SPX still finished up 30 points, over 30 points. And these bulls just keep blasting this thing higher. And I keep talking about a pullback correction, and it's like, damn, I'm just going to give in and just say, screw it. Let's go. But when you start thinking like that, that's a time to say time out, pause. So nothing's changed for me the way I'm approaching things, still being disciplined, still following the plan, still trying to get the greatest risk versus reward trades and not make bad decisions. But damn, like you look at some of these nuclear stocks, OKLO yesterday, ticker symbol OKLO, just exploded. My Lord. NNE, nanotech nuclear energy, shout out to Jason, exploded. And these moves are just something to marvel at, and I hope that you guys are getting a piece of these. I know I didn't have any piece of those tickers. I told you all about yesterday, what was going on with yesterday. But man, they're just beautiful moves. Google ripped, continued to rip yesterday. And it's just a fun thing to watch. It's a fun thing to watch. And I mean, I said at the beginning of this video, the SPX is 7,000. With as much liquidity that is out there right now, with the Fed about to cut rates even more after this quarter basis points cut, the business-like approach that this administration is taking to making deals with other countries, it's hard not to be risk on. Now, that doesn't mean there are not risk factors out there that we have to be cognizant of, because there definitely are. Weakening labor market, inflation is still an issue. The deficit is an issue. So we can't just blindly just jump into positions. We have to be smart about it. But my target for end of year was 6,600, and we smoked that. And it's only September. And in the most bearish month of the year, the bulls just dominated. They dominated September. So we can't sit here and say that the SPX can't hit 7,000. In fact, it's probably more likely to hit 7,000 than we are to have a crash. I mean, you'd have to think it right now. Or maybe me recording this video is a signal that, hey, everybody's too bullish. But I'm not. Remember, caveat, I am cautious, right? Bullish, but cautious and protected. And the last thing I want to point out, the trade desk had an order come in toward the end of the day. I think it was around $1.6 million, or was it 1.6 million shares? It was something crazy. This buy order that came in, and a lot of people are saying, oh, the bottom's in on the trade desk. Well, I don't think it is yet. I think we probably still have a little bit more weakness. I have set up probably 50% of my position, and I have buy order set for if we drop lower. And I still haven't recorded the video yet, but I want to talk about my thesis on why I think the trade desk is at a good value right now. There's some good opportunity. There's still risks there because of the competition from Amazon and their advertising program. But we did see some buys come in yesterday on the trade desk, and who knows, maybe we'll get some follow through on Monday. But I do think that probably has a little bit more lower to go. But it is one that I'm positioned in, and I'm ready to ride for the long haul because it's probably going to take some time. So anyway, question for you. What is more likely before this year is over? Is it the SPX at 7,000, which just sounds absolutely insane for me to say that. I remember when it was exciting to hit 4,200 back in 2023, coming out of the bear market. But is 7,000 more likely on the SPX or a crash? Let me know in the comments down below your thoughts. Smash, touch, flick, tickle, pinch, whatever you want to do, that subscribe button. We're so close to 1,000. And as I always say, make it a great day and honor the moment. Take care, everyone.